I'm Ann Terry, and welcome to Ask Ann Anything, where I answer all your financial questions about real estate and home ownership. Today, we're talking about homeowners insurance, and while that may seem like a boring topic, I'm going to break this down in such a way that you'll call your insurance agent for some serious conversation when we're done. Our first segment will convince you that you must shop around for insurance. As one of my clients found out, utilizing a company with a large advertising budget and celebrity endorsements did not mean she got the best coverage. In part one, I will answer the question about the difference between an insurance broker and an insurance agent. You'll also find out how to identify what perils are covered in your insurance policy. Discover whether your policy offers replacement value or actual cash value, and whether or not your insurance carrier has placed a cap on your replacement costs. All insurance carriers are not created equally, as you will learn from my special guest, LaTanya Simmons, Vice President of Aon Private Risk Management Company. I'm excited to have you here, LaTanya. I know you grew up in the insurance industry. Both your mother and your father had a very successful insurance practice. As a matter of fact, your parents were my insurance agents for years, and I relied on them heavily. And it helped me to understand why trust is so important, especially when you're talking about insuring such a valuable asset as your home. So why don't we have you start off by telling us who you are and who is Aon?
Well, thanks so much for having me, Ann. It's my pleasure to be here and to talk to you and your audience as well. As you mentioned, my name is LaTanya Simmons, and I am a private risk advisor with Aon Private Risk Management. So Aon is actually a global professional services and risk management firm. So we are all insurance brokers. But my particular expertise is in working with individuals in terms of their physical assets, like their home. We also do other assets such as auto, watercraft, aviation, and as well as liability issues like umbrella. But we are, as you mentioned, like my parents, trusted advisors. So we are here to help you preserve your wealth and using property and casualty insurance as a tool to do that.
And I don't think people really stop to think about insurance from that standpoint.
Mm-hmm.
I think most people, when they buy insurance, it's just, okay, if I have a water leak, I don't have to pay for it out of pocket.
Mm-hmm.
If I have a fender bender, I don't have to, I can call the insurance company. They don't understand. And, we're going to get into a little bit more about what effect claims can have on everything. But I think for most people, they just look at the dollar amount.
Mm-hmm.
And I became very, well, first of all, I'll back up. Let me back up to my experience with your parents.
Mm-hmm.
Prior to working with your parents, I did not fully understand insurance brokerage.
Mm-hmm.
Now, mind you, this is probably about 20 years, so I've learned a lot in 20 years, okay? But I didn't understand because I went with some of the companies that you hear advertised all of the time.
Mm-hmm.
And I think when I really grasped the benefit was when insurance rates were going up for whatever reason. And I remember talking to your dad, and he just shopped around and he wound up getting me better coverage for a lower rate.
Mm-hmm.
And so help people to understand the difference between an insurance broker,
Mm-hmm.
and I imagine you call them an insurance provider.
Agent. Mm-hmm.
What's the difference? Help them to understand.
I think the main difference is who that person represents. So a broker, for instance, represents the client and is working on behalf of the client to find the most competitive coverage as well as the best pricing. An agent typically represents the insurance company or the carrier. Mm-hmm. So they are looking to protect the carrier's interest more often than not.
Okay.
So that's, I guess, the main way to think about it.
And that's a good way to think about it.
Mm-hmm.
Okay, so the broker represents just the client.
Right.
Got it. So you're an insurance broker.
I am.
And you've been doing this how long?
I've been doing it 23 years.
Oh my gosh.
Yep.
So you've learned a lot. You've probably seen a lot.
I have.
Well, I want you to know why I was very excited about having an insurance broker here. As a real estate agent, you understand that when a person is buying a house and we're sending them to a lender, and we're going to have a lender here who will wind up probably defending some things, but we'll see. But the insurance premium is key to determining whether or not that person will even close on that loan. Because we know that they are required to have homeowners insurance.
Exactly.
We know that you have an annual amount, and that annual amount is divided into 12 payments. So 1/12 of that annual amount is calculated or factored in to their monthly payment schedule.
Right.
That could cause someone's debt to income ratio, depending upon the amount, to exceed what the lender needs it to be in order for them to qualify for the loan. So I've had clients who, when I talk to them, yes, they're going to use this particular insurance company because that's who has their car, and you'll talk to us about policies where you have your home and your auto on the same policy so you can get a discount. But what happens is that the lender will wind up sending them to an insurance company. And then they'll come back and say, oh, the lender got me a better rate. But they don't understand what that may mean.
Exactly.
Because they don't understand insurance. The terminology is crazy. No one sits down to go over the policies. They don't know how to compare the policies. And for many of them, they just want a house.
Yeah.
And if me going with that lender's agent is going to get me in my house, then that's who I'll go with. But they may not have the protection that is needed in the event of them having to file a claim or a loss. So with that said, I guess we kind of need to start, I guess, at the very beginning. And let's talk about some terms or some things that they need to understand. And then I want you to talk about that debt page in terms of how they qualify. So what's the purpose of homeowners insurance? Simply put.
I think the best way to think about it is not just a means to an end. It's not the barrier between you and buying the house. That really what it is a promise. It's a promise to be there in the event that the unforeseen happens. I don't think anybody buys a house with the intention that it's going to burn down or that it's going to be broken into or something catastrophic happens, like someone gets injured. But what you want to make sure is that the agent or the broker that you're working with is going to be there when you need them, but also the carrier is going to be there when you need them. And they're going to be there in a way that keeps you whole, that you're not put into a bad position or bad predicament because either one of those relationships was not what you thought it was. So I don't think your experience is any different from a lot of different people, that often you don't really know what you're buying. You don't have the opportunity to ask questions. And really, you just need to slow down and ask the questions because it's your policy, it's your money, and it's your promise. And you need to feel comfortable that you understand how the company is going to respond if something happens. So that I think is probably the best way to think about insurance, is just that promise. And are you comfortable and trusting in the promise and the people and the players, that's going to be there.
So there's this word perils. An homeowner's insurance policy will cover certain perils. I believe there's about 16 of the perils. Tell us what some of those perils are.
I think there are some of the ones that easily come to mind. Lightning strike, fire or smoke, vandalism, malicious mischief, watercraft, if that were to fall out of the sky, falling objects, windstorm, hail. We've had a lot of discussion about that previous years where hailstorms have come through Georgia and other areas across the country. I think I said theft already. So those are probably the main ones that come to mind.
What comes to mind to some people, which isn't usually covered or under the 16 perils, is floods.
Mm-hmm.
So therefore, if their house floods,
Mm-hmm.
now kind of help us understand when you say flood. So we're talking about rain water coming down and coming and flooding, or are we talking about a burst pipe causing a water intrusion?
Mm-hmm.
Help us to.
Yeah, I think that's sometimes a misnomer. People say flood very loosely.
Yes.
But the thing about many policies and really insurance companies, they are very specific about their definitions of what a flood is. So flood would not be your toilet overflowing and flooding your basement.
Right.
That is not a flood.
So that would be covered under the perils.
Exactly.
Okay.
Right.
But you know what? You said a lot of insurance companies, they are very specific. When you wind up looking at an insurance policy, and I mean, I'm guilty. I look at the deck page and I'll let you tell me about, but when I get down to all those pages, it's like, oh my gosh, you know what I'm saying? I consider myself an intelligent woman, but most of what's written down there is boring. Yeah, it is. And it's boring. You know what I'm saying? So people don't take the time to understand it. So if they really want to understand what they have, the deck page, which is short for declaration page,
exactly,
is where they go.
Yep. So the policy really is in two forms. The first part is the declaration page that has the numbers. It's telling you what you're buying in a coverage amount form. So it tells you the amount of coverage on your home, or the amount of coverage on your contents, or your liability limits. And that part is important. I think that's probably the meat of it. But really, the other pages, that's where things can get a little bit dicey when you look at what perils are actually covered, what's going to cause those numbers to come into play. So that's, even though it is boring and it is confusing, that's really the difference, because all insurance carriers are not created equally.
Right.
So one may have a list of 16. One may have a list of 20. So those are the things that you kind of have to know and understand when you're making a selection in terms of which carrier is going to be the right one for me.
And you know what? And you're being very nice talking about the carrier, and I get that. But the agent plays a huge role in this, because I'm pretty sure most agents know that the average person doesn't understand insurance. So now I'm coming to you to get insurance. I have to rely on what you say. In most cases, an insurance agent is going to write a policy and give you something, and you're like, okay, and I sign it, and that's what I. Now, even before I get there and go there, insurance agents work on commission basis. Is that correct?
More often than not, yes.
Okay, so I work on commission. I understand commission. And as an insurance agent, you want to sell a policy. So you're going to make it work for me. An agent is going to make it work for me. Okay? And sometimes to make it work for me may not be the best thing for me. Are you with me?
Yep.
Okay. So going back to the deck page, will the deck page wind up showing whether or not there's a replacement cost versus an actual cash value cost? And if you will explain the difference so that our viewers can understand, because it's important.
Yep. Typically that information is found on the declaration page, and that is a huge difference. What the replacement cost is stating is that in the event of a loss, will you be made whole exactly the way that the house was prior to the loss happening? And that's a really key piece of it. Because certainly you don't want to buy a policy and then have half a house rebuilt, that you want the entire thing rebuilt. So that's why it's really important in terms of that replacement cost or dwelling amount that you don't skimp on that. You don't try to push it down or back the land out, because ultimately that's going to hurt you on the long run, because you want to have those numbers be accurate, even though it may cost you a little more. And I think that's where shopping around comes in, because maybe that's not the right carrier for you. Maybe there are other alternatives that's going to give you the better pricing, but you want to make sure that you are kind of going straight down the line when you first purchase the policy.
Okay, so that's the replacement cost
Mm-hmm.
versus the actual cash value.
Mm-hmm.
So what is that, a depreciated cost?
It is.
Okay, so we're going to simplify things, okay? I had a fire. My house was totally burnt down.
Mm-hmm.
As long as my insurance policy declaration page
Mm-hmm.
shows that I have a replacement cost,
Mm-hmm.
the insurance company will pay to replace that house just as it is.
Exactly.
Okay.
Mm-hmm.
However, if I am trying to keep my debt to income ratio low
Mm-hmm.
so that I can qualify for this loan,
Mm-hmm.
and a lender says, I work with an insurance company, they have the best rates, they came in and gave you a better rate,
Mm-hmm.
but it was actual cash value. But because you didn't understand the difference between the two, you took actual cash value, your house burns down, and you only get enough money to build 75% of a house.
Right. Yep.
Huge.
Yep. Yep. And
That is huge.
Yep. It is very important, and it's a small difference, but it's a big difference that comes out usually 2, 3, 4, 5 years later, because inflation is real. That costs change, and you want to make sure that your insurance policy has built into it that fudge amount. That if things do cost more, certainly we've seen lumber has been difficult to obtain.
Right.
Labor has gone up. Just even the ability to get some materials. So we want to make sure that we don't make a choice now that may hurt us down the road from an actual cash value.
So even with replacement costs, that it doesn't matter if the home has appreciated, you're still going to get replacement.
Well, there's the caveat that insurance companies, I guess several years ago, did not have a cap. Now most policies do have a cap on replacement costs, and that piece of it is also in the declaration page. So depending on your carrier, they may have a cap of 120% or 150%. So that does give you a little bit more room to work with. So let's say your house is insured for $100,000. The house burns down, you then get $120,000 or $150,000. But there's the cap. However, there are policies that offer guaranteed replacement costs. Now that is the premier coverage because
Guaranteed replacement.
There is no cap. So if it costs twice as much to rebuild your house, they're committed to doing that without a limit in terms of that, as long as you're getting like for like. So if you've got bamboo floors, that's exactly what you'll get regardless of the price.
And you know what? I don't think people realize how important your relationship is with your insurance provider.
Mm-hmm.
And again, I know your dad has retired. I never had to worry about my insurance.
Mm-hmm.
I thought about something you said. You need to know that they're going to be there when you need them. Mm-hmm. And your parents were always there when I needed them and when I didn't. You know what I'm saying? I would get a call from your dad. He was the one that was always out and about. I would get a call from your dad and he was like, Ann, we need to look at this. That meant so much to me and had a lot to do with why I was so loyal to Trip Insurance Company. So I think it's important that you have an agent you can trust, even if somebody's going to refer them to you. Most people don't trust insurance agents.
Yeah, and that's unfortunate, and I think to your point that we want to be there when the bad things happen, but we also want to be there the other 364 days of the year, that we want to get to know you. We want to get to know what's important to you. We want to understand, what your values are, what your lifestyle is, because that allows us to serve you better if we're looking at you as a person or as a family. So that way we can kind of direct you and advise you because we know you in terms of that, because everybody's different.
And that's so important, and I hope the listeners are really hearing that. Yes, George Tripp would come by the house and Rob would just to take a look and talk, and I'd get birthday cards and all of these things, but I really felt that they were interested in knowing who me and my husband were, so that they could make sure we had the kind of protection that we needed. Many people have financial questions and they don't know where to get answers. Now you do. We want to be your resource by providing you with educational information in a way you can easily understand from people you can trust. I invite you to send your questions to Ann at askannanything.com. Your questions form the basis of our show. Additionally, we offer live Zoom educational classes on home buying and credit that you will want to take advantage of. Remember, home buying starts with planning. For more information or to register for our course, go to askann.com. Now, if you enjoyed today's show, please click like and submit. I look forward to seeing you next time.